We're going to look at the issue of source documents and internal control. So we looked at internal control in Chapter 1, and source documents will help ensure that we have internal control because our records will be accurate and reliable, and that'll prevent our assets from theft, fraud, and misrepresentation. So that was our actual definition of internal control. So therefore, having all these documents helps ensure reliability because we've got source documents that we've saved and they're used to verify the transactions that have taken place. And actually, as importantly, there's documents to prove that transactions haven't taken place. What do we mean by that? Well, let's look at all the documents we've been through so far in Chapter 3. We've got the following documents. Actually, we should have copies. They will prove, or the originals, they will prove that a transaction has taken place. So a cash receipt, a check butt, or a sales invoice, a purchase invoice, or a memo are evidence of a transaction taking place. Just as importantly though, orders and quotes are actually evidence that a transaction hasn't taken place. If we've just ordered something and yet a supplier has given it to us and said we now owe them money, we can keep a copy of the order and say we didn't actually go beyond ordering. We haven't got a legal contract yet. So therefore, just keeping a document can be useful to prove that something didn't happen. Lastly, we've got a statement of account. That's a summary of all transactions and ensures that all your transactions have been recorded accurately. We're using a specific example of internal control. Assuming Mary's a head of accounts payable, a supplier has sent our business invoice 67 for $1,050. It's Mary's responsibility to pay that invoice. So instead of paying $1,050, she sends them $1,500 on check number 8. So she's overpaid the account by $450. So the supplier is going to realize that and send back an extra $450 and say you've made a mistake. And Mary, if she's dishonest, might decide to keep that money rather than give it back to the business. So we need to have some internal control measures to pick up this fraud. So what could we do? Well, the first thing we could do is employ a second person. That's called a separation of duties, and make sure that Mary has to share her job with someone else, and that way the other person will identify any sort of fraud. Secondly, we could have job rotation, make sure someone else does Mary's job for 6 months and they'll pick up on any errors that she may have made. And lastly, document control. We want to keep copies of all documents so we can prove whether something did or didn't happen. So looking at that last one, what we'll get from, Mary's firm will get from, in this case, Big Supply Company, is a statement. So we've learned what a statement is. It's got all the transactions for the month. And now you can go to Mary and say, invoice 87 was for $1,050, yet you paid $1,500. How come? So Mary might respond, I made a mistake and accidentally got the 5 and the 0 round the wrong way. So then the next question becomes, that's okay, but they're saying on this statement that they've sent us back a refund for $450, yet our bank account never got that money. So what we've done is use a document trail to find an evidence of theft here. So that's why source documents are really important for internal control, because they provide evidence of transactions that both have and haven't happened.